Hey, what's up guys? Nam here. So in today's video, I'm gonna go over 7 stocks to buy and watch for long-term plays in the month of June. If you're someone like me who likes to make investing as simple as possible and rather look at stocks on a weekly basis or even on a monthly basis, and I'm pretty sure plenty of you guys, myself included, have careers and life outside of investing, so I'm trying to make things as simple as possible. I try to invest in a way that I can maximize gains with the least amount of time spent managing it. So I spent hours researching every individual stock, so watch to the very end so you can see a full analysis of each one. Alright guys, so before we start, I gotta put this disclaimer out there. Always do your own research before investing into any type of stock, and any information that's presented here is just for entertainment. Even though I'm investing it with my own personal money, you should always consider doing your own research before investing. So the first stock that we will be talking about will be ENPH Energy Inc. with the ticker symbol is ENPH. So ENPH Energy is a solar company that develops microinverters for solar panels and all different types of solar hardware. So they are the leader in this type of space. So at the making of this video, ENPH is trading around $48. Within the last year, it went from $16 all the way up to $70 at its all-time high. This stock has a market cap of around $6 billion and the PE ratio is 29.15. So it's on the higher side, so this may be a little bit of a riskier stock since it may be a little bit overvalued. Unfortunately for this company, it doesn't pay out dividends. Now let's take a look at the fundamentals for this particular company. So on its income statement within the past 4 years, it's been pretty consistent in revenue between 2016 and 2018. It's sitting around $300 million, and most recently in 2019, it was a little bit over $600 million. Even though the company has been making more and more money throughout the years, the net income has been also grown as well. As you guys can see in 2016 through 2018, the net income was becoming smaller and smaller, which means that the company is reinvesting more of its income back into the company to help it grow. And as of 2019, it started to pay itself off. Now let's take a look at the operating performance. The gross margins were declining from 2015 to 2017, but then it began to pick up again back in 2018. And in 2019, it was 35%. So for net margins, the company was in the red for a few years up until 2019. So now let's dive into its technicals. So let's start with the monthly charts. As of right now, I only have 3 indicators on the chart. I have EMAs, I also have a MACD, and I also have an RSI. So as you guys can see here, ever since January of 2019, it's been on a bullish trend, higher highs and lower lows. But if you look down here at the RSI, it looks like it's going downwards while the price is still going up. So that means that it could be a bearish divergence. So there's a possibility of a reversal. But if you look at the MACD here, it looks like it's slightly rounding off, but it's still pointing upwards. So there's no loss of momentum there. So now let's take a look at the weekly charts. This is basically my bread and butter. This is what I'm mainly focused on. So as you guys can see here, there's a retracement ever since of May 18th of 2020. So if you look at the past, the price did bounce around the 40 EMA. This is the blue line here that I have been working off of. So just keep a close eye on the price action because it may bounce off of the 20 or even the 40. MACD starting to look like it's converging, so maybe slow in momentum. RSI is pointing downwards as well. Also, if you look at the RSI on the weekly charts, higher highs right here, but lower lows. So that's a sign of a bearish divergence, meaning that there might be a price reversal. So just keep an eye right here for a possible entry point. The only reason why I think this is a worthy investment is that even though it's definitely a little bit on the more expensive side, it peaked at an all-time high at $70 a few weeks ago, but it's beginning to retrace. So it's possible is maybe setting up for another entry point. This company has generated over $205 million of revenue within its first quarter of 2020. And the company does expect the second quarter to be half of that, around $115 to $130 million, just due to the fact of the stay-at-home orders and possible slowdown of businesses. Renewable energy has always been a part of political pressure depending on how you look at it. If there's more cases to make renewable energy a priority, the growth of this company can continue to grow much higher than its recent all-time high. And besides, it does have strong financials and it has an in-demand product and also expanded throughout the whole world. And this company does remain the leader in residential and commercial solar products. I recommend continuing a high watch on this company. If there's signs of recovery after its retracements, it's definitely a buy. The next stock that we will be talking about will be Taiwan Semiconductor Manufacturing, ticker symbol TSM. So a little background on this company is that it manufactures and sells circuits and semiconductor devices. So it basically is a chip producing company that builds a lot of computer chips for smartphones, computers, and consumer devices. Within its sector, which is the semiconductors, it is the largest by market cap. So now let's dive into the numbers. Right now, it's currently trading around $56. Its 52-week range is anywhere between $37 to $60. Average volume is pretty high as well, around 10 million shares traded a day. This company does have a market cap of $285 billion, and this one does also have a dividend yield of 5.17%, which is pretty good for a dividend yield. So now let's talk about the fundamentals for this company. So taking a look on its income statements, the total revenue for the past 4 years, dating back to 2016, has been growing steadily from $900 billion all the way up to almost $1 trillion in 2019. Net income has also been growing as well. It's been ranging anywhere between $300 to $400 billion. So now let's take a look at its operating performance. So within the past 5 years, the gross margins has been pretty steady, roughly around 48% to 50%, and also its net margins is roughly around 35 to 33%. So that's what you want to see. You want to see the company's gross and net margins at a steady percentage rate. So now let's dive into its technicals. So starting on the monthly charts, this stock has been bullish ever since 2010. As you guys can see here, just upward momentum, higher highs, lower lows. But if you look a close eye at the RSI here, it peaked out right here in 2017. And also there was another peak here in 2019. Higher highs, lower lows, possible bearish divergence. But the thing with divergences is that it never really lines up perfectly always. It's something just to keep in mind of. Whatever your trading strategy is, you should just make sure that you have a checklist of what you want to see. So if it follows your trading strategy, then enter. The price peaked out in January of 2020. So it dipped back down in March as most stocks did, then it bounced and it started to recover. It's making a higher high since the last close back in May. So this looks like a pretty good entry point on a long-term standpoint. So now let's take a look at the weekly charts. All right, so on the weekly charts, this is what you want to see. It's looking really good. It dipped in March, as we all see. MACD is just crossing right now. RSI is not overbought or oversold. So it closed above the 10 EMA. This is a good entry point. I'll also put a stop loss right here at around 49.4. So in recent news, this company is building a $12 billion plant in Arizona and is also receiving aid from the federal and state governments. With tensions between the US and China, TSM has been holding talks with the White House concerning developing computer chips within the US. This is basically a blue chip company just due to the fact that it does have strong cash flow and a pretty solid balance sheet. Even during the pandemic, I'm pretty sure it will continue to keep up paying its dividends. The next company that we will be talking about will be Costco, ticker symbol COST. As you all know, this is your mom's favorite shopping spot where you can just buy a 5-gallon jug of mayonnaise, meanwhile buying a tent for the summer. So this is a retail store that requires a membership to get wholesale prices on wholesale items. So at the making of this video, this company is currently trading around $298. Within the past 52 weeks, the range has been anywhere between $258 to $325 at its all-time high. Currently, this company does have a market cap of $131 billion and the PE ratio is at 35, which is a tad bit on the higher side. Currently, this company does have a dividend yield that pays out at 0.93%. So now let's dive right into the fundamentals of this company. On the income statement, within the last 4 years from 2016 all the way up to 2019, it's been having consistent growth from $118 billion to $152 billion in revenue. The net income has been steadily growing as well from $2.3 billion all the way up to $3.6 billion. Now let's take a look at its operating performance in the past. So as you guys can see here, from 2015 all the way up to 2019, the gross margins has been pretty consistent around 13%, and the net margins has been ranging around 2%. So now let's take a look at its technicals. All right, so on the monthly charts for Costco, ever since 2010 has been bullish like most stocks. What you can see here though is that the MACD has started to cross bearish. RSI is also going negative as well. So just keep an eye on that because on a bigger scale, on a monthly charts, it's going to take some time for it to go down. But if you can see the price action, it bounces around the 20 EMA on the monthly time frame. So just keep an eye on that. So the monthly time frame is roughly around $270. Right now, price is around closer to $300. If you take a look at the weekly, it's been a little choppy the past couple weeks. It's bouncing off the 40 EMA right here. So that's why this could be possibly a great setup, depending on the direction right now, because it's starting to flatten out. So if the price does tend to recover, this could be a great entry point. MACD is still going down. RSI, it's still within buying range. So if there is a MACD cross going upwards, then that would be a good entry right there. Since this is a blue chip company, it's a fairly safe investment and is one of the stocks that Warren Buffett holds himself within his portfolio. So with the recent retracement, this is worth looking into to place or add to your position. A lot of companies within the retail space has been hit pretty hard due to this pandemic, but Costco has not been one of those. This company has a super loyal shopper base, and the renewal rate for Costco within the last quarter is 91%. Pandemic or not, Costco will continue to thrive. The next company that we will be talking about will be DaVita, ticker symbol DVA. So this is a company that provides kidney dialysis services for patients who have chronic kidney failure or renal diseases. So this company does have a chain of facilities around the US that provide these services. So now let's take a look at the numbers. At the making of this video, a share roughly costs us around $78. So the range for this particular stock within the past 52 weeks has been $48 all the way up to $90. The trading volume is roughly around 1.4 million daily. This company also has a market cap of $9.5 billion and a PE ratio of 12.5, which is not too bad. But unfortunately, this company does not pay dividends. Now let's dive into the fundamental analysis for this company. So looking within the past 4 years, dating back to 2016, the total revenue for this company peaked out in 2016 at around $14 billion. Ever since then, there's been a slow downtrend, sitting around $11 billion from 2017 to 2019. So as for the net income for this company, it fluctuates between 160 million all the way up to 800 million. So from a fundamental standpoint, this is not what you want to see. You kind of want to see a steady growth going upwards. So now let's see how the operating performance is for this company. For the gross margins within the past 5 years, it's been fairly consistent, anywhere between 28 to 30%. But as for the net margins, that's the one that has been a little bit more inconsistent because it ranges anywhere from 2 to 7%. So aside from the fundamentals, one of the main considerations is due to the technicals for this particular stock. So DaVita on the monthly time frame, it was bullish ever since 2001, but it started to become bearish May 2015. So it's been on a downtrend, as you can see with the EMAs here. But as of late of last year, it became bullish again. That's a 10 EMA, 20 EMA, 40 EMA. A MACD is bullish, RSI bullish as well. So on the weekly standpoint, since these are so close together with the price, this could be actually a bearish divergence. Don't take that into consideration because this could be a possible setup for entry with a stop loss possibly at around 62. Depending on your risk tolerance, you could make it a little tighter if you like, but this is the main reason why I consider DVA as a good entry point right here. So when it comes down to it, this company does perform pretty well compared to its value and its possibilities. As more Americans become older and sicker, the demand for dialysis services will continue to rise. But also keep in mind that Warren Buffett did sell a little portion of DaVita from his portfolio. He only sold about 1% of DaVita, so it's really not that much, and he had this company in his portfolio since 2011. So based off my research and what I found is that investors kind of have mixed feelings about this company. But for me, I'm kind of more of a technical investor. So I kind of tend to look at the charts a lot more often. So I would consider this a buy with a stop loss. So the next stock that we will be talking about will be EPAM Systems, ticker symbol EPAM. So a little background on this company is that it's a tech company that's been around 1990 and provides software product development and also engineering services. As of late, this company did partner up with AIS Group, which provides software services to insurance companies. So now let's dive right into the numbers. So at the making of this video, EPAM is trading at around $235. The 52-week range for this particular stock is from $151 all the way up to $248. The stock has a trading volume of around 400,000 shares per day, and this company has a market cap of 13 billion and a PE ratio of 47. Unfortunately, this company does not pay a dividend, so now let's take a look at its financials. Ever since 2016, there has been an upward trend in revenue from 1.1 billion all the way up to 2.3 billion in 2019. The net income is a little bit different. Around 2016 and 2017, had a net income ranging around 72 to 90 million dollars. The past 2 years has been ranging around 240 to 260 million dollars. So now let's take a look at its operating performance. Gross margins for this particular stock has been on a slow downtrend from 37 to 35%. Net margins has been steadily growing as well. It dipped down in 2017, but ever since then, it's been a little bit on the higher side from 13% in 2018 and 11% in 2019. So now let's take a look at its technicals. So looking at EPAM on the monthly, it's been bullish ever since February of 2017. Ever since its inception, it's been pretty bullish as well. There's a little bearish trend right down here back in December of 2015 to January of 2017. But still, all signals were still bullish. Take a look at it here, 10, 20, and 40 EMA on the monthly chart. MACD cross right here. RSI It's been overbought for such a long time, but it's still going down. As you guys can see here, I feel like the momentum is not going to stop anytime soon. Let's take a look at the weekly charts. As of late, it's still been bullish ever since of January 2019, the early of last year. Since the market did tank back in March, it's starting to recover. As of right now, it's almost reaching at its all-time highs earlier of this year. So me personally, I would probably wait for it to go a little bit lower, probably closer to 220. You can still enter right here. I would probably put a stop loss at around 20 EMA, which is around 210, 213. Aside from that, MACD has just crossed recently, a few weeks ago, still looking good. RSI recovering as well since March, still looking good as well. As I mentioned earlier, there were some partnerships as of late. In addition to EIS, they did partner up with a blockchain-based payment system company called Finality. So for the fundamentals for this particular company, on the income statement, it showed all the financials were great. But from the technical side, this is why I like this stock more. The next company that we will be talking about will be Centene Corp, CNC. So this company is a healthcare insurance company that provides services to underinsured and uninsured individuals inside of the United States. It works with subsidized programs like Medicaid and also state programs. So now let's take a look at the numbers. For this company, it's currently trading around $62. The 52-week range for this stock is around $41 to $74. The average volume for the stock is roughly around 4.7 million shares per day, and the company has a market cap of $35 billion and also has a P/E ratio of $33. Unfortunately, this company does not pay out any dividends. So now let's look at the fundamentals. So on its income statement, revenue has been increasing yearly since 2015 from 40 billion all the way up to 74 billion. As for the net income, it has been steadily growing as well since 2015. That income was around 560 million all the way up to 1.3 billion in 2019. So now let's take a look at the operating performance. Gross margins has been pretty steady, anywhere between 11 and 12%, and net margins have been around 1 to 1.7%. So now let's take a look at its technicals. So let's take a look at CNC on the monthly charts. So it's been bullish ever since of November 2010. It got a little choppy between June 2015 and also January 2017. So almost 2 years of choppiness, but everything, all the signals right here were still bullish. I did have a little bit of a bearish trend right here back in, was it October of 2019? But ever since then, it's been recovering. MACD down here just crossed RSI, good buying range. This could be a good entry point, but this is on the monthly chart. So this is like the big scope of things. Let's take a look at the weekly. As you guys can see on the weekly, there was a bearish trend for a little while, but ever since September of 2019, it's been recovering. This is kind of like the main reason why I think this could be a good entry point. If you guys take a look right here, it's starting to look like it's bouncing off of the 40 EMA. So if it does bounce back from here and it closes green, maybe 2 candlesticks, MACD just crossed, RSI is pointing down. MACD and RSI, the signs don't look that good, but I tend to look at price action a little bit more. So let's take a look at the next 2 candles in the upcoming weeks. So the reason why I think this is a valuable pick is that recently this company did acquire WellCare, which is a healthcare insurance company as well, which means that there are more members now that are enrolled in Centene's insurance plans. Since this insurance company targets underinsured and uninsured individuals, one of the main reasons why this probably grew was due to the fact that unemployment has been increasing as well. When unemployment rises, people tend to lose their health insurance. With many people in the Federal Reserve expecting the economy will probably rebound in the next 2 to 3 years or so, Centene is probably a good pick for the time being. The next stock that we will be talking about will be Moderna Inc., which is a ticker symbol MRNA. So this company, it focuses on mRNA medicines. In layman terms, it helps develop vaccinations. This company recently did develop a vaccination that could potentially be the vaccine for COVID-19, and it's currently in phase 2 of its clinical trials. Now let's take a look at its numbers. So currently this stock is trading at $62 per share. The 52-week range for the stock ranges from $11 all the way up to $87, which means that it almost had a return of 8x. And the average trading volume for this stock is around 21 million shares. The market cap is currently at 23 billion, and there's currently no dividend yield for this company. Now let's take a look at its financials. On its income statement, in recent years, the revenue has been going down. Net income has also been declining as well. So as a long-term investment, this is what I would consider to be risky, since the financials don't look solid. So now let's take a look at its technicals. All right, so for MRNA, let's take a look at the monthly charts. It looks insane right now because it's like straight parabolic. Because if you look at this on a monthly chart, you probably would not want to touch this because of how fast it ran up. Even the RSI is overbought. There's not enough information even on the MACD. So on the weekly charts, ever since the end of last year, has been pretty bullish. So it reaches all-time high back in May 18th of 2020. So it's starting to look like it's retracing right now, but all signals are still bullish. If it's gonna bounce off of the 10 EMA, if the next candlestick does close green, it would be a pretty good entry point. MACD is starting to look like it's curving off. RSI overbought, but that doesn't really mean much for this type of particular stock because it's a very high risk growth stock. Depending on your risk tolerance, I wouldn't mind putting a small position if the next candlestick does close above this one and it is green as well, because it can grow much higher than its previous highs. The reason why this company is worth investing into is that this is one of the 5 companies that was selected by the Trump administration to try to develop the vaccination for COVID-19. But again, this company is kind of high risk just due to the fact that it isn't possible to predict which company will get to the finish line first before the other. There are some other players in the market that are trying to develop a vaccination as well, so depending on your risk tolerance, this could be a high growth stock for more risky investors. If you guys are considering investing into any of these stocks, consider using the WEBULL app, because when you guys sign up, you guys can get 2 free stocks, one when you sign up and one when you put $100 into your account. So each stock can be valued at $1,400 a piece. And also, if any of these stocks are out of your price range, you can always use the M1 Finance app. This is what I personally use for my retirement account, just due to the fact that you could buy partial shares, which makes it pretty easy to invest consistently. Alright guys, so that pretty much does it for me. Hopefully you guys got some value from this video. If you guys haven't already, make sure to give this video a like because that really helps support the channel. And also subscribe if you want to see more videos like this in the future. And if you want to hang out with me some more, check out my videos over here.